Welcome to Tax Amnesty Accountants. My name is Andrew Grosz, and I've been a chartered accountant for over 30 years. I specialize in accounting and taxation for voluntary disclosures and tax dispute resolution. I will be presenting to you a number of videos on taxation in a straightforward manner with a minimum of technical jargon. Topics will include how to choose a tax accountant and myths and misconceptions about tax amnesty or voluntary disclosures. So stay tuned for more tax topics as they become available. I have been interviewed on CFRA radio on Business at Night Tax Tip Tuesday on voluntary disclosure, which is presented in this video, and CRA tax audits, how to avoid a CRA tax audit, and what to do if you're audited anyway, which will be presented in an upcoming video. We have clients from across Canada and as far away as Asia. So if you have a question or concern about your specific situation or for more tax topics, visit www.TaxAmnestyAccountants.ca. Enjoy the audio portion of this video.
580 CFRA.
Here with Business at Night on 580 CFRA. It's Tax Tip Tuesday, and with us tonight, Andrew Grosz, a chartered accountant and specialist in accounting and taxation for voluntary disclosures. Welcome to the program.
Thank you.
Why do people come to you?
People come to me because, for various reasons, they haven't filed their income tax returns, or they might have income that has been unreported, whether it might be due to criminal activity or the underground economy, or very often they just didn't know that there was a certain type of income, such as pension income or foreign investment income, that they had to report for Canada revenue tax purposes.
So it sounds like some of this is just accidental, and some of it is perhaps intentional. They knew that it was something they needed to do, but they just were pushing it away.
That's right. Or, for example, a lot of eBay sellers made a lot of money, and they didn't realize that they had to, or perhaps, like you said, they didn't want to include that income. But since Revenue Canada has access to eBay accounts, they figured that they'd better come clean before Revenue Canada came to them.
Exactly. Taxes is not something anyone wants to think about.
Not at all.
So how do you advise them? What's the first step when you have something that, whether it's accidentally or intentionally, you've put aside? What do they need to do when they come to you?
Well, the first thing is to determine whether they qualify or not. And there are four basic rules that they have to abide by. One, it has to be voluntary, which means that if Canada Revenue Agency has some kind of enforcement action against you, then you wouldn't qualify. The second aspect is that the disclosure has to be complete. So you present as much information as you can about your situation. The third one, it must involve a penalty, because penalties are based on taxes owing. If the taxpayer doesn't owe any money, then there's no penalty and consequently no need for voluntary disclosure. And the fourth and final one is that the information must be more than 1 year past due. In other words, if you forgot to file your tax return this year and you figured, maybe I better file it and I don't want to pay penalties, so you're doing it just to avoid the penalties for 1 year. So usually it involves several years. And this, by the way, can also be applied to corporations, individuals, and individuals with businesses.
Now, people coming to you must have a lot of fear. What can you do for them?
Well, basically, I explain the situation, and what happens is we file the voluntary disclosure request indicating what the situation is and letting them know that if they qualify, they won't have any penalties, prosecution, and they may also qualify for a reduced amount of interest. And there are a lot of scare tactics out there about Canada Revenue Agency putting you in jail and so on, and that's not really true. They just want to get you back on board, get the money that you owe them, and there is really nothing to worry about. And very often what happens is after an interview, I put their minds at ease, and they can breathe a sigh of comfort knowing that once it's filed, everything will be just fine.
Well, I imagine they would feel much better knowing that jail isn't an option. If you do qualify, what is the worst that can happen?
Well, basically, all that will happen is you have to pay them the tax that you owe and a certain amount of interest. But again, there would be no penalties. And in some cases, I've been able to reduce the amount of years that had to be filed to as low as 3 years, even though they might not have filed a certain amount of income for 10, 15 years. Very often, what can happen is that they didn't file because of an error, and it was not intentional. So in a situation like that, there's something called statute-barred years. So if it's more than 3 years old, and there was nothing intentional about it, then pretty much a 3-year period would be all you would have to file.
So if anyone has concerns, they know that there's something lurking in the back of their tax file, what's your best advice?
I think what one should do is be a professional who knows what they're doing. They should try to estimate what their potential tax liability is, because sometimes it's not worth using the voluntary disclosure program because you only get one chance to use it for a particular situation. So very often I get referrals from lawyers. They pay the fees to file the voluntary disclosure, and once I actually process the tax returns, they basically get refunds for most of the years. So very often, especially if you're a T4 employee, you get refunds as opposed to having any penalties or taxes to pay.
So that's an unexpected outcome.
Right, and they're obviously very pleased with that. By the way, I should also mention that there are individuals who are non-residents who live abroad. They may still have to file Canadian tax returns, or residents who've come back and who have unreported foreign income. And that's very often a big problem, because if they get older and they want to bring the money in and give it to their family or whomever, they want to be able to bring it in without any tax consequences. That's another reason why someone would want to come forward.
Now, are these tax conversations confidential?
With me, they're not. Through a lawyer, let's say you engage a lawyer and the lawyer hires me, anything we discuss is governed by the lawyer-client privilege. Very often you don't really need a lawyer in some circumstances. I would recommend a lawyer if there might be some criminal activity involved, if there is a very complicated situation. Certainly a lawyer is the way to go, and then he would hire an accountant. But very often people have come forward and I've done disclosures for them, and there is no real need for a lawyer, because you have to disclose to the best of your ability whatever went on and all of your income. Now, whether you're going to disclose it through a lawyer or through an accountant or even by yourself, you have to tell them what you have, and you have to sometimes provide documentation. So going through a lawyer doesn't necessarily mean that you can hide information.
So the best advice, unless there's some criminal problem, is to get advice.
Yes, that's always good advice. And if you find that a tax professional is putting a lot of pressure on you to go ahead with it, I would be wary about that, because, again, there is really not much to be afraid of. The CRA contacts that I've dealt with have, for the most part, been very easy to deal with, unlike some people might want you to believe.
All right, we'll leave it there. Thank you so much, Andrew.
You're welcome.
Appreciate you